Angel Gurria. He's Secretary General of the Organization for Economic Cooperation and Development, and he's here with us because he will be attending that meeting later with Merkel. Mr. Gurria, thank you so much for joining us on the program. There's a lot of concern out there that actually, since the last time we spoke, just over a month ago, we haven't really advanced much. Now we're talking about a banking crisis that may accelerate. Is the ECB forced to do something today? Otherwise, we'll plunge into a recession.
Well, the ECB is doing plenty already, together with the other central banks. They're providing liquidity in the markets. They have said that they will provide further liquidity if needed. They're talking about longer-term liquidity provided, because remember, the one-year facility simply got a sunset by itself. You know, they didn't force it. It just happened that people were not using it anymore. So that was a good way to go. And now if they have to put it back on the books for a while, that is okay. That will provide confidence. And last but not least, the question about interest rates, where we believe there is space. There can be a reduction in interest rates, both to signal that the authorities are vigilant and also that there is concern about the recovery of growth, or the what I would say the robustness of the recovery, and also because there is sometimes you have to decide, and when the going gets tough, the tough get going. You know, you have to decide for one.
At least, because the ECB, you're right, has done its part. Governments seem to be a little bit slow on the uptake, so some of the tough are actually a little bit slow to get going. I just wonder how important it is that we get something in terms of interest rates today, because this is the last news conference from Mr. Trichet, so it will put his successor in a very difficult position.
Well, it's always difficult when it's the last conference. I'm sure we're going to see a lot of Mr. Trichet going forward, maybe not in that capacity, of course, but I would rather do it today. I think it would facilitate things enormously. It would make things easier for Mario, certainly, but that's not about, you know, making things easier for Mario. It's about the substance of the thing. It's about the message. It's about the language. It's about signaling where we're going. This would be a pretty potent signal.
Confidence. Is that what we need? It's just about giving to the market, saying, guys, we're on top of this.
We're on top of this. We're vigilant. We're looking at this. We're worried, just as you are, and we're doing something about it.
The banking crisis seems to be escalating a little bit, and at the same time we seem to understand that there's a U-turn, that actually some of the banking associations are now talking about stressing tests, you know, doing these extra stress tests, but incorporating the haircuts that the markets are putting. Is this a good U-turn?
Stress test always should have fully taken into consideration the sovereign debt implications. This separation between the trading book and the banking book, and one being at mark to market and the other one being at 100 cents on the euro, that was very artificial. And it also gave a signal that did not provide confidence to the markets. You know, like you're saying, you're playing games here with definitions, etc. I think the fact that you go out now with new stress tests that fully take into consideration the impact of sovereign debt. We called for this, by the way, when we were in Budapest in the meeting of the European Ministers of Finance, and there was the IMF and Mr. de la Rosière, who is presenting his report. We did too. So a number of institutions said it is very important to come out with full transparency on the linkages with sovereign debt.
But if we do stress tests, assuming a 50% haircut in the event of a Greek default, are the French banks seriously going to be under pressure? And if they are, and we see a recapitalization, is at the end of the day the AAA credit rating of France under pressure?
Well, when there is a recapitalization, there are many ways to do it. One is, of course, to ask for more capital from your shareholders, from potential new shareholders, and for a limited time, if necessary, by the governments, who will then, of course, sell it back to the market once conditions allow. That has been done again and again. It has proven to work, so why not this time?
How important is it, though, that we get a resolution sooner rather than later? Are we risking a Lehman Brothers type event?
No, I don't want to be cataclysmic. Sooner is always better than later when it comes to definitions that are keeping the market on its toes. When there's uncertainty, you have to eliminate the uncertainty. That's it. Not because something terrible is going to happen. Let's not compare things with the past. You know, it's very difficult. Just that we have to deal with this issue. It's a new issue. It's a new phase of the post-crisis period. We have to deal with it so that we can get on with the question of growth. In the end, it's about getting back to growth. And if the banks are not operational, you can't talk about getting back back to growth.
What banks, though, are more in trouble? I spoke yesterday to the deputy leader of the CDU. He says the German banks are fine, but there are questions about other banks. Is it the Italian banks that will be under pressure, or is it the French banks that will be more under pressure?
The question is to do a thorough and a complete analysis. Then we will know. And also, to each of one of the authorities will have to signal how they are willing to do it. For example, in Spain, the cajas have just been, a few of them have been capitalized only last week. You know, they put 7.5 billion euros into the capital. That means they're dealing with it. These were relatively small amounts when you compare it to the hundreds of billions that you're talking about in the rest of the world. But it means things are being done. It's being worked on. The building blocks are there, and signals are important here that we're moving in the right direction.
Yeah, let's hope so. Mr. Gurria, thank you so much. That was Angel Gurria, the Secretary General of the OECD.